Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Thursday, January 5th. I hope everybody had a great day. The stock market continues to coil in its range. We're still kind of just consolidating on the market. We were down over 1% today, but still within the range that we've been in for the last couple weeks. The jobs numbers came in stronger than expected today, so from the perspective of the Fed policy, that would kind of indicate that the Fed definitely has the wiggle room to keep tightening as they indicate they want to. They said that they have no plans to pivot their policy in 2023, and this is just more ammunition for them in that cause, because there's no real weakness yet in the job market. So they'll feel like they can continue to tighten, or maybe they'll feel like they need to continue to tighten until they see some weakness there. So I thought that was kind of interesting. And again, that kind of plays into my thesis that I've kind of been talking through the last couple episodes, and that is that usually you'll see a big move in a market or in an asset after it consolidates like this, like what we're seeing right now on the S&P 500. And the fundamentals of this market tell me that it's more likely going to happen to the downside than the upside. And we've picked out our levels to where we think it could head next. Obviously, we have this resistance point here at around 36.66. And then obviously the low from back in October, which is around 3,500. I think that there will be buying pressure from each of those points. But if we really do get this big move, this big next leg down, I've had my eyes on the 3250 on the S&P 500 as a possible level. And the reason for that is, let's just scroll back over here, is that's where we had a huge double bottom after COVID as we were coming into the recovery following COVID. We had a huge double bottom at that level around the 3250. And then we actually went into a trading range following bouncing off of that level. And we stayed in that range, in that channel, until January of last year when this bear market began. So I think it's reasonable for us to go back to that level, especially if we do see this big move downwards. That's definitely possible with the Fed continuing to tighten, and as the economy begins to feel the effects of that rapid tightening and those rapid interest rate hikes. I think it's definitely a real possibility. Obviously, it would be painful. I'm not going to sit here and just pretend like that would be great, but sometimes markets do need these times to stay healthy for the future. I mean, if you're investing in accumulating shares, accumulating assets right now, it'll pay off in the long run. So if you're someone like me who's younger in age, then this is a good time to kind of build that base and let it pay you over the course of your lifetime. So nothing to panic about. That's just what I'm looking at. I want to see if I can actually pull the Bitcoin chart up and have it actually show my levels, because I haven't been able to do that recently. Let's see. There we go. Perfect. All right. So same thing, honestly, on Bitcoin. We broke through a range here, which was around the 17.7, really the 17.5 to. We broke through, we came back up, tested it, rejected it, and we've kind of just been going sideways right underneath it for a while. Obviously, we'd been talking about this 12,000 to 10,000, kind of 9,000 range for a while, but it hasn't got there yet. And I do think that we could see that level in the event that the stock market also goes down pretty fast. Oh my goodness, excuse me, sorry, my cats were not getting along. They did not like that idea I had, so I apologize for that. But I think that Bitcoin definitely could still see those levels. It's just taking a little bit longer, but we're definitely still in this downtrend on Bitcoin that we've been in since I think November of 2021. Let's take a look at the chart right here. When did we start going down? Yeah, November 2021. So it's been in this trend for a while. There's no real reason for it to change yet. And another reason why you could say the stock market has this potential for another leg down is because we haven't really seen that capitulation, that panic, the spike in the VIX, which is the volatility index. And typically you'll see that around the bottom of a bear market cycle. So I think that we still need to see something on the VIX that would indicate really, really extreme fear. And we should see some price action on the charts to go along with that, and we haven't seen it yet. So that's just another reason why I think uh, that could happen. And obviously, the trend is always your friend, and there's no real fundamental changes on these markets. So you should err on the side of the trend. So I'll leave it here. Honestly, still some boring stuff. We haven't really gotten that action yet. We're still going sideways, but I really do appreciate everyone who is watching or listening to this episode. If you enjoy, please subscribe on YouTube and follow wherever you listen to podcasts. Recommend it to a friend, whatever you got to do. I appreciate it, and I'll see everyone tomorrow.